Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines and important ones at that. But as always, let's take a look at what is happening in the Asian markets. Well, they are doing really well. Across the board, there's a lot of buying that we are seeing. And this, of course, ahead of the US inflation report, which is expected today, and a strong handover that came in as well from the US markets. Hang Seng is opening after a day's break, so it is absolutely flat with some negative bias. However, good gains coming in for the Taiwanese index, which is up around 0.6%. You have Kospi, which is sitting with gains of 2%, and we also have Nikkei, which is higher by 0.3%. So barring Hang Seng, it is green on the Asian screen, as a result of which the SGX Nifty is indicating that the start for our own markets could be well in the green above that 18,000 mark. However, do note that SGX Nifty has come off from the high point of the day. It is up around 100 odd points as we speak, nevertheless indicating a strong start for our own markets. Let's talk about the US markets now. Wall Street ended Monday's trading session higher, with the Dow Jones gaining over 200 points, the S&P 1% higher, and the Nasdaq Composite surging close to 1.5%. All eyes today, of course, will be on the August inflation data ahead of the Federal Reserve September meeting next week. CNBC's Sarah Eisen gets the wrap of all the action on Wall Street.
Wall Street continues to bounce back, with many investors expecting that tomorrow morning's inflation report from the government will show that price gains moderated last month. The Dow closing up almost 0.75%. The S&P 500 gaining a bit more than 1%, and the Nasdaq rising 1.25%. CNBC is reporting that Wall Street giant Goldman Sachs is preparing to cut several hundred jobs in the new month amid big drops in demand for its services, like selling high interest rate bonds, getting new stocks listed for public trading on stock exchanges. And Goldman also having trouble with its Apple-branded credit card. Customers aren't paying almost 3% of charges. That's the worst loss rate among the country's big card companies. That's the action from the U.S. market. Back to you in Mumbai.
Okay, the big number to watch out for, of course, will be the August inflation data. But let's stay with Wall Street now. Let us get you some important opinion coming in from Wharton School's Jeremy Siegel, Jonathan Golub of Credit Suisse, and former Fed Vice Chair Roger Ferguson. Listen in.
Honestly, I think that so much bearishness on all the indicators. It seems like everyone that wants to be out of the market is out. Everyone that wants to be tactical is short, and therefore the surprises are going to be on the upside. I mean, the dollar is coming down. That is very, very good news. Potential good news in developments in Ukraine, although it does, certainly indicate more uncertainty. Looks like we're going to have a pretty decent print on the CPI. I do think the Fed has decided, barring some extreme news, that we are going to go 75 on this time.
If you would have told any of us a year or two ago that we'd have 8% inflation, we wouldn't believe it. We would think that that's unthinkable. So the Fed is not going to simply look at forecasted inflation and say, oh, I'm done, and so they're going to need to see confirmation. But the market believes that come the first quarter, if we continue to go on this glide path where things renormalize, that they're going to start to either pause or signal that they might pause. And if they do that, the stock market wants to move ahead of it. The stock market's really going to take off.
I don't think it's going to come down rapidly from here for a couple of reasons. One is something that Secretary Yellen talked about, which is there's always a risk of a surprise that drives commodity prices, particularly oil, back up. Secondly, labor markets continue to be very tight. The most recent reading shows, again, roughly 2 job openings for every unemployed person. Yes, the labor force picked up in terms of size just a little bit. But all those seem to me like, improvements moving in the right direction, but only modestly so. So I don't see anything that's a fundamental break in the fact that inflation is much too high. And the final point to make is the level of inflation, even if it comes down a bit, is still quite a bit above the Fed's stated 2% goal.
Okay, that is some expert opinion coming in for the US markets. Moving on to the final update on our global market wrap. European markets closed sharply higher on Monday, with the British FTSE surging over 1.5%, the French CAC, which was higher, up close to 2%, and the German DAX closing over 2.5% higher. The British economy grew 0.2% on a month-on-month basis, which is lower than the consensus forecast of 0.4%, as inflation continues to soar, straining economic activity as well. And that's the global market action. Let's talk about how these cues are going to impact our own markets. We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. We have our house full today. Hi guys, a very good morning to all of you. Ekta, let me come across to you first. What is the market setup looking like today?
Well, morning. The market momentum is intact. So the market as of yesterday rose for the third straight session. In fact, the markets are near 1 month highs. We have the Nifty, which is hovering close to 18,000. For yesterday, we had Reliance, ICICI Bank, as well as Infosys, which really helped in terms of momentum and strength for the markets. FIIs continue to buy, so they are committing more in terms of the net cash. The net bought over 2,000 odd crores in yesterday's trading session, and this is followed by over 2,000 odd crores in Friday's trading session as well. So that's definitely a thumbs up. In terms of the macro data, we had the August CPI data, which disappointed a tad bit, came in at around 7% versus a poll of 6.84%. IIP also disappointed at around 2.4% versus a poll of around 4.77%. But it is definitely a global market rally that we are seeing. So maybe the markets would shrug off that CPI data. This is on account of a weaker dollar, hopes that inflation data, which is due today from the US, has peaked, and the military success by Ukraine. So maybe there could be some reprieve when it comes to commodity prices. Asia largely in the green, SGX indicating a positive start. Brent crude still sub $100 per barrel. There was a movement upwards, but nonetheless still sustaining. And in terms of the cues for our markets, it's definitely going to be hands down the US CPI inflation data, which is due this from the US in today's trading session, estimated at around 8% for the month of August. This compares to 8.5% in July and 9.1%, which is a multi-year high that we saw in the month of June. It will prepare the markets in terms of what to expect from the FOMC on the 20th and 21st.
Okay, yes, looks like a good day for trade today. Ekta, thank you so much for all those cues. And we have Vaishta with us, who is joining us to tell us all the stocks which will be in focus today. Hey Vaishta, good morning.
Good morning, Sonal. Well, the first stock is Ujjivan Small Finance Bank. This is a CNBC-TV18 news break confirmed, where Ujjivan Small Finance Bank launches a QIP of rupees 475 crores with an indicative price of 21 rupees per share. Moving on to Krishna Institute of Medical Sciences, where KIMS acquires 51% stake in Span MediSearch Life Sciences. The next is IRB Infrastructure, where the August 2022 gross toll collection numbers are out and it has jumped 35% year on year. While for Dixon Technologies, wholly owned subsidiary Padget Electronics becomes the first company to receive the approval for the disbursement of PLI incentive from the Government of India. And for TCS, CNS Wholesale Grocers partners with TCS to build an AI-powered distribution model.
Okay, all right. Those are all the stocks that will be in focus today. Thank you so a lot for that, Vaishta. And finally, Nigel is joining with all the cues from the F&O space. Hey, Nigel, good morning.
Well, morning. It's a beautiful weather here in Mumbai, and you'd be tempted to snuggle in bed. But if you're a bull, well, you'll say, let's wake up and go, because it's going to be around 18,000 odd on the Nifty today. And that's the first time that the Nifty will be above that 18,000 mark all the way since April 5th. What are the cues that are stacked up? The FIs, they continue to show us the money. They are putting in that 2,000 crores odd almost on a regular basis. The DIs, they offset that. They are, sold close to around 900 crores odd. Now, the Nifty ended high with a gain of close to around 100 points odd. But what I've observed globally as well as domestically is the volatility index as well as picking up. Remember, when the Nifty ends higher, normally there's an inverse relation between that. But ahead of a big event, the CPI data is what we're going to be looking at from the US today. And also you have the Fed meet. So ahead of the big event, you see volatility as well spike up. That could be one reason. But otherwise, this is, a bit of a word of caution when the VIX moves up as well. Moving on. You had the Nifty moving up. The bigger open interest build-up was on the Nifty futures, telling you there was long addition out there. And the FIs, they added some long positions, close to 4,000 contracts on the long side. And they covered out some short positions, close to 6,000 contracts on the short side were covered out. Net, they're still short on the index, close to around 75% of their positions are on the short side, which, as we have been saying, is not such a bad thing because it could get them squeezed out. And that's what's pushing our markets higher. On the index options space, well, it's pretty much bullish. They bought more calls than puts, but what's really encouraging is they wrote way more puts than calls, close to around 25,000 put contracts in an uptrending market. For me, the most important factor is put writing, telling you that the bulls believe they have a bit of a base at lower levels. And what were they writing yesterday? 17,900 as well as 17,800 puts, both of them very, very active. However, the highest open interest continues to remain at around that 18,000 call. So the SGX Nifty gaps up. Resistance comes in at around that 18,050, 18,100 because the 18,000 call has the highest open interest, while support is seen at around the 20 DMA, which is up for you on the screen. Back to you.
Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. India's consumer price inflation has risen to 7% in August, led by higher food prices. CPI continues to remain above the RBI's upper limit of 6% for the 8th consecutive month. Meanwhile, India's factory output witnessed a 2.4% growth in July. Lata Venkatesh is here with the analysis. Lata.
That's right. Inflation is a slightly bothersome number because it's come in not just higher than street expectations, but that ugly 7 handle, which we thought we would put behind us, 7 has come back. The worst part of the number, which one always feared, is coming in from food inflation. Cereals inflation has come in at 9.57%. It's almost a 2% month-on-month gain in cereals. The government probably smelt it, and that's why you had that import ban on broken rice. This is going to be a spot of bother because of the spatial distribution of monsoon and the fact that there is a desire to hoard food grains and perhaps therefore higher exports of rice as well, now that wheat exports were banned. So we have to watch the space, the food space and the cereal space in particular. Food inflation as well coming in almost a percentage point higher than the month of July, coming in at well over 7%, 7.6% is a spot of bother. This may not change the Reserve Bank's approach to monetary policy which is up on September 30th, because the Reserve Bank had forecast a July, August, September inflation of 7.1%. And with 6.7 in July and 7 in August, the average still seems to be running a little south of the Reserve Bank's forecast. The experts we spoke to are all expecting a 25 to 35 basis point hike on September 30th. That's almost a given. That's what the market is watching for. By the way, speaking of markets, the bond markets may not react to this at all. They are only watching out to what the JPM Index Committee decides. So that market will move to more index inclusion and perhaps to crude prices. This coming in about 10 basis points or 15 basis points higher than the market expectation will not be a bother for the bond markets. A word on IIP at 2.4. It's a bit of a disappointment because our poll was at 4.8 and just about everyone on the street was around 4 or higher than 4. But IIP is not a much watched number. There are problems with the composition of the basket itself. And within IIP, consumer durables may be a spot of bother. Non-durables. That's come in at about -2%, which indicates that the lowest level FMCG goods are not getting consumed enough, which indicates some pain at the bottom of the pyramid. But otherwise, not much of a bother. Overall picture doesn't change much, except that inflation is a little higher than expected, growth a little less than expected. That's not a very pleasant combination.
Okay, yes, thanks a lot for making sense of these numbers, Lata. Moving on, state-run oil marketing companies may get a fillip. Sources say the government is likely to use funds mobilized through windfall gains tax to help OMC PSUs stay in shape. As things stand, oil marketing companies are taking losses for every litre of diesel being sold, and they're not losing any more due to petrol. Timsi Jaipuria filed this report.
Well, that's right. What sources are indicating to us is clearly that the government is likely to use funds mobilized from windfall gains tax levy to help public sector OMCs to stay in shape. Sources are indicating that government feels PSU OMCs, they need help right now. They've already incurred a huge loss, a net loss of 18,500 crore rupees alone in first quarter, and second quarter too seems to be a little difficult for them. Thus, they need government support, and government feels that rising inflation, volatile fuel prices may pose additional burden on OMCs. Thus, it is very important for them to stay in shape. Government is currently contemplating a mechanism to funnel in funds to OMCs, and soon stakeholders will hold discussions to see how best these funds can be utilized, and most importantly, what could be a mechanism to funnel in these funds. The final contours of financial aid mechanism for OMCs is still to be discussed. That will be something that Finance Ministry officials along with Petroleum Ministry and these OMCs will sit together and see what could be a best possible mechanism. But yes, as of now, sources clearly saying that the levies that the government has earned from windfall gains tax was meant for exigencies and not to meet fiscal requirements, and exigencies like to keep OMCs in shape is something that they need to address immediately. Back to you.
Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. We spoke about equities. It's time to talk commodities now. Manisha Gupta is joining us with all the update this morning. Hey, Manisha, good morning.
Morning, Sonal. Thank you so much for that. Well, I'm talking about the crude oil prices right now, where we have seen a second straight day of gains coming in, so much so that the Brent prices now are trading above $93 a barrel. Well, there are tight supplies ahead of the winter heating season that has been supportive. And then especially with all this conversation about Russia slashing gas supplies to Europe, the G7 nations are going to implement price cap on Russian oil. And you also have the U.S. energy oil stocks at the lowest since October 1984 is something that is adding premium to prices. And not just crude, take a look at the metal prices, because we have seen strength come back into this one. The silver prices gained up by 5% overnight. Copper is trading at a 2-week highs. Aluminum and zinc prices also have rebounded on power problems in China and Europe. And Russia is now, because of withdrawing forces from northern Ukraine and the US dollar rally pausing, also seems to be getting some money back into the risky assets. So whether it's energy or base metal prices, silver, everything has opened positive in the Asian markets today.